Welcome back to the Malaysia Money Matters show. It's the 15th of January 26.
Good to be here.
Today we're looking at how some major Malaysian companies are making big moves, all while, these huge global forces are in play.
Right. You've got the AI megacycle on one hand and this massive resource rally on the other. It's a tricky environment.
Definitely. Let's kick things off with Hengyuan Refining Co. They're aiming to get back to profit in FY 2026, which would snap a 3-year losing streak. What's the strategy here?
Well, it's not just hope. It's a very deliberate de-risking strategy. They just completed a RM 234 million rights issue.
So existing shareholders put more cash in.
Exactly. And that cash allows them to lock in their feedstock supply long term. They're not as exposed to the volatile spot market now.
Okay, so that plus shorter-term hedging and the Buddha 95 subsidy, it builds a much more resilient foundation.
That's the idea.
Speaking of infrastructure, Tenaga National just hit a major milestone. Phase 2 of the Energi wheeling agreement is done.
Yes, this basically finalizes the LTMS 2.0 framework. It really cements their role as a regional energy highway.
An energy highway. So they're moving electricity from Laos to Singapore.
Right through Malaysia and Thailand. And for that, TNB gets paid wheeling charges. It's like a toll fee for using their power lines.
A nice, stable revenue stream without building anything new.
Best kind.
Now, on to resources. Hibiscus Petroleum's associate 3D Energem has found some unexpected gas down in Australia.
That's right, in the Otway Basin. And what's really crucial here isn't just the discovery itself, but, its location.
It's close to existing infrastructure.
Very close. Pipes, processing facilities, all of it. So while they still need to check if it's commercially viable, the cost to get it to market is way lower.
That makes a huge difference. Okay, let's switch to construction. TRC Synergy landed a massive contract, RM 249 million?
It's a big one for complex buildings in Putrajaya's Precinct 5. And what's wild is that the contract value is about 42% higher than their entire market cap.
Wow, that's fantastic visibility. But doesn't putting all your eggs in one basket like that create a lot of risk?
It does consolidate their pipeline, but you're right, it's concentrated risk. But on the flip side, it shows a strong government commitment to these key projects.
And one last corporate note. AirAsia X. There was talk of a name change.
Yes, they clarified that. They might become just AirAsia as part of the consolidation, but importantly, Capital A cut its stake to below 33%.
To avoid triggering a mandatory takeover offer.
Exactly. A very deliberate corporate maneuver.
Okay, let's zoom out to the global picture. Nomura Asset Management is telling everyone not to worry about an AI bubble.
They're being quite bold about it. Their view is that these high valuations are actually supported by real earnings growth. They're not seeing a repeat of the dot-com bust.
They're comparing it to 1997, which is a brave comparison given what happened a few years later.
It is, but their point is that this is different. It's about infrastructure investment. They're projecting over 30% earnings growth in areas like chips and data centers.
So the argument is that this time, it's backed by tangible cash flow.
Yes, that AI is already being used to drive real productivity. It's not just a promise of future revenue.
While tech is heating up, so are commodities. We're seeing a blistering rally in metals.
Gold, copper, and especially silver. Silver topped, what, US $90 an ounce?
What's driving silver so hard?
It's a mix of things. Bets on US rate cuts, some renewed positive sentiment out of China, and of course, geopolitical tension. People want tangible assets when things are unstable.
And a quick one on trade. The U.S. Supreme Court has delayed a ruling on the Trump-era tariffs.
Yeah, that's a big one to watch. If they rule against the administration, it could trigger over US $130 billion in refunds. A real shock to supply chains.
Let's bring it back home. Big changes are coming to Malaysia's expatriate policy on June 1st.
This is massive, yeah. The headline is that minimum salaries for most permit categories are doubling.
Doubling, that's a huge jump.
It is. Now, they're also extending permits up to 10 years and making it easier for dependents to come, so they're trying to stay competitive.
But the salary hike is really meant to prioritize local talent, isn't it?
Absolutely. It forces companies to either hire highly skilled expats or invest more in a local workforce and automation.
We also saw some movement on the Sabah revenue entitlement under MA 63.
That's right. The second round of negotiations is set to begin. It's a signal of commitment to honoring that founding agreement.
On the integrity front, the NACC chief commissioner is pushing to finalize some high-profile cases.
Including army procurement corruption, yes. This comes right as the Negeri Sembilan ruler made a strong statement against normalizing support for corrupt individuals. A very clear message is being sent.
Got it. And a quick digital ID clarification for our listeners. Mayonnaise isn't mandatory yet for everyone.
No, but if you're an existing user at the Johor entry points, you do need to register for My Digital ID by today, January 15th, to keep using it.
Though there's a trial period until the end of February.
Right. And finally, we're waiting on a landmark federal court decision.
This is about anti-dumping duties.
Yes. The court will decide if the government has to show its math, basically, to reveal how it calculates duties on foreign companies. It's a huge case for transparency. So if you pull all these threads together, you see Malaysia trying to reform internally governance, talent, transparency, while these massive global waves of AI and resource demand are crashing on its shores. The real question for you to think about is, can the domestic reforms happen fast enough to really capitalize on, or even just withstand what's happening globally?
That's a great summary. Thank you for tuning in to this deep dive. If you want to stay on top of the financial headlines that matter, make sure to subscribe to the Malaysia Money Matters podcast. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.